The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got jobless claims this morning, and you got markets rocketing higher, getting back all of the intraday losses yesterday. How about that? 7,000 on the dot. S&P's up by 35 points, up by 0.5%. Now, you're up by 35 points on the session, but we're up by 77 points off of the lows of yesterday. So more than 1% off the lows. We kick it off with higher prices. NASDAQ 100. You're up by 1.1%. Again, all of yesterday's losses right back to where we were on the close of action on Tuesday. And you're talking about almost 500 points, almost 2% from lows to highs of yesterday to where we are coming into the open. NASDAQ up by 1.1%. Dow not participating. Dow flat right now to slightly in the red, off 16 points in the Russell. Up by 4. Russell was the big winner yesterday. Bitcoin, it's been quite an acceleration, taking a little break today. You're down by $700. But yeah, it's been quite a run. The last month or so, from 85,000 yesterday, you hit a high of 98,200. We're about $1,000 off there at 97,225. Crude in focus. When I was coming on the air at 3 o'clock yesterday, crude just dropping out of the sky on comments that I ran. We're not going to bomb them just yet, I guess. Tension's easing. There was the drop off at 3 o'clock. We're lower from there, 59.32. Crude off $2.56. You see the breakout, and we're pulling back. There's some decent volume yesterday, and already 150,000 contracts in crude, 9 a.m. Eastern Time. We jump to yields. So as I mentioned, we got jobless claims today. They come in a little late, actually. We'll get into those. But right now, you got lower price and higher yield coming at you. We get the 10-year right now. Negative by 7 ticks at 112.08. 4.16 is the yield on the 10-year. You jump over the dollar index. And on a little bit higher yield, you got some dollar strength. Check out that move. 99.41 right now. On the dollar, we jump over to metals, and that's hitting metals this morning. You're right back to the overnight lows. 45.98 gold, down by 0.8% or $38. You jump over to silver, and just like that, we're $5.50 off of the high. 93.70. We're at 88.31. Silver off 3.4% right now. You get a strong dollar. That's hitting metals this morning. We got yields higher by a bit, and let's jump over as the banks continue their earnings in Goldman Sachs. Decent numbers, but again, we're trading lower. All the banks this week, right? JP Morgan kicked it off. Bank of America, Citi yesterday. Goldman is today. Tops profit estimates as equities, asset, and wealth management outperform. Profit up 12% from a year earlier, $14.01 a share. Revenue, though, dipping 3% to $13.45 billion in the quarter. And they're blaming that on the revenue hit of disassociating, offloading the Apple Card loan portfolios to rival JP Morgan Chase. Well, if you're talking about credit card debt, not a bad time to unload it when you're capped at 10% for a year. So revenue misses, 13.45, but as they say, may not compare. You got some offloading costs for the Apple Card. Profit beats. Yeah, equities trading. Revenue jumping 25% to $4.31 billion, $610 million more than the market was expecting. Asset and wealth management business revenue $4.72 billion, unchanged, but above what the market was expecting. And yeah, the market takes it and we trade lower. It's been a heck of a run for these banks, and they're disappointing coming into earnings season so far, that's for sure. You jump over to Verizon. So, boy, you know, I've talked about, if you're following the program, in terms of the deals they had out there during the holidays for Apple and iPhones, etc. And so now I'm with Verizon, and my phone was showing SOS for like 6 hours yesterday. 6 hours my phone was showing SOS and would not work as a phone. It worked on Wi-Fi, which people have in their offices most of the time, so I could call people on FaceTime. But yeah, my phone. Now, you know, we had a rotation going on, but pretty remarkable that there was no reaction whatsoever, man. You know, to be down for almost a full work day that I couldn't use my mobile phone that operates as basically everything these days, that's going to become the norm. As in, to see no reaction whatsoever. We got bad ticks all over this chart. Verizon, let's back it up. On your weekly, always unfortunate when a bad tick like that will distort. I mean, this thing just really can't find a bid. You get this sell-off back here in October. You get a pop a bit, but you can't break through that bar right now. And boy, I said it, you know, if you were... Just run the numbers, folks, okay? They're giving out phones, tablets. It's the whole new generation of subsidizing the $1,200 phone and the $600 tablet and the $600 watch. I'm wearing it right now. $550, $600, something like that, included with my Verizon plan. They signed me up for 3 years, okay? Now, I forget, the phone's 3 years for sure. The tablet and the watch might be 2 years to pay those off. But I'll just jump to another service in the year, and I'll get paid from that one if I want to. And if I'm not, I'm paying a phone bill anyway. And if you add up the cost to the devices that I got, almost $2,500 in devices, basically provided free if I stay with Verizon, and my bill is only about $120 to $130 a month. That's all you're talking about. So I got to stay for like 2 full years just for Verizon to get back the money that it would have cost me to buy those devices in itself. So maybe if I stay for 2 years, now what happens, right? Well, maybe you stay for 8 years, for 10 years. That's part of the scenario. But man, the margins are tough to come by when you got two giants like Verizon and T-Mobile competing by giving you, and look at this chart. The charts say it. Now you get a nice sign of strength. December 15th on T-Mobile. You back this up on the daily. I really started looking at these, unfortunately, coming into the holidays. It was Black Friday, actually, so it was around Thanksgiving. And I pulled up these charts, and that was the deal. It was Black Friday. And I said, man, you know, the charts always say it, right? Competition is so fierce right now. The charts just say it. How are you going to make money when you're competing that? Look at this volume off the top on T-Mobile. Now, it's been a heck of a run. You go from the COVID lows. I mean, T-Mobile, you talk about a darling story. Hey, all we're ours. We're right back to the 382, just like that. But we got volume, man. You got volume since the acceleration. Look how we drift higher, right? At the beginning of 2025, you're doing 79.7 million. So 80 million and then 70 million. And look at how that last exhaustion. You get huge price expansion. And meanwhile, you only do 70 million shares. And that's the lightest volume we did all year. That little last exhaustion from 232 to 273. Volume dries up, you get selling, and boom. There's the acceleration on the tariffs, and you never picked up, man. This thing never caught a bid. And you go from the tariff lows of 232, and every time, man, look at the acceleration in October. Let's back it up on a weekly. You know, the only thing is, hey, if you're looking at these equities, there's a nice sign of strength. December 15th, you put this thing on a daily, options expiration. That was a lot of selling, though, actually, on the week. So Verizon, T-Mobile under pressure. We'll come back, folks. We're taking a look at some more of the banks. We'll look at some growth stocks as well. NASDAQ up 270. We'll come right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got the S&Ps up by 35 points. All the markets in the green right now. NASDAQ 100, you're up by 1.1%. We talked about Goldman and Morgan Stanley. As I mentioned, just kind of bad ticks all over the place here. Morgan Stanley, we close at 180.78. We're slightly in the red on their numbers. Tops investment banking forecast on debt haul. How about that? Debt bankers increased their revenue almost 100%. Yeah, with debt underwriting revenue at $785 million. How about that one, man? Almost $1 billion in 90 days in debt underwriting. Total investment banking fees $2.41 billion, up 41%. Net new assets came in at $122 billion, above expectations. Whew. Now, how about BlackRock? $14 trillion. Now, you know, they basically represent the ETFs that are the market. Investors added $268 billion on a net basis to its long-term investment funds, including $181 billion to ETF business that now has $5.5 trillion overall. The tally in the last 3 months of the year, the annual haul, almost $700 billion. Whew, including money market and cash managed funds. Almost $700 billion in 1 year. Yeah, look at these flows in the fourth quarter. Full year net inflows hit a record of almost $700 billion. And this is talking about net long-term flows and net total flows. And they just separate the two of them. And yeah, I'd say people are looking to do more access with BlackRock on those types of numbers, man. 13, 16 a year. No, excuse me. Yeah, 13.16 a share a year. 13.16 a share. Earnings per share versus 12.28. Revenue up 23%, and they're at $14 trillion, man. My goodness. Yeah, BLK. Yeah, look at this thing, man. Let's put it on a monthly. Actually has not performed as well as some of the other banks out there. But nonetheless, now volume-wise, look at this. I don't know. Keep your eye on this one now. We're going to trade higher. We'll see how the volume comes in. You get a lot of volume in April, and then you trade higher on lighter volume, and then you accelerate lower in October. Maybe come back and test those highs again at 1,200. We're trading at 11.17 on BlackRock right now on their numbers. They had their numbers. Conference call. They're their numbers at 6 o'clock, and they got a conference call that started at 7:30. What are we talking about now? How big of a company is this company now? $173 billion company, BlackRock. Quite a bank. All right, we talked about jobless claims. 198,000. Yeah. Claims have only been below 200,000 a few times in recent years. The 4-week moving average, 205,000. So not exactly out of the norm that we've been getting recently. The black here is the 4-week average. And especially during the holidays, that's going to sort out some of the volatility. We'll see how April goes. We're still talking about coming out of the holidays here, as this is the week ended January 10th. Okay, basically that 1 week back on initial claims. But in the context of a Federal Reserve under extreme pressure to cut, you can see why. There's some hesitancy. We have jobless claims plummeting. Look at that 4-week average. We're approaching 240,000 on a 4-week moving average. We're now at 200,000. Continuing claims declining to 1.88 million, and that is, though, the prior week. That includes New Year's. Continuing claims 1 week delayed versus the initial claims number. Before adjusting for seasonal factors, initial claims jumped as is typical for this time of the year. Texas, California, Michigan saw large increases. All right, NASDAQ 100 continuing to run right now. Up by 1.2% coming into the open. And let's jump around to some of the equities. Amazon shares. You're going to be up by about $3 in the pre-market. You jump over to NVIDIA, the big dog, up $3 as well. Look at that run, man. Always remarkable, the market capitalization on NVIDIA. You're at 180 yesterday. You're at 186 today. That's $150 billion in market cap. I mean, imagine. I just went over the numbers. BlackRock, right? They're a manager of $14 trillion. BlackRock is a $175 billion company. Okay? Well, NVIDIA, from where they were yesterday to where they are today, is the market capitalization of BlackRock, because they have about 25 billion shares, folks. Every $4 is 100 billion shares in market cap. Just to put in context, I mean, you know, all the big stocks are pretty close. Apple, flat right now. So Apple not participating in this rally. You jump over to Microsoft right now, up by a few bucks to 462. We jump over to Meta shares, up by a few dollars as well. Oracle, under pressure yesterday. You're popping by a couple bucks to 195, 196 make it. We jump back to metals. Gold back above 4,600. Silver down 2.5%. I was talking about copper last night. Copper's on quite a run, man. You jump over to FCX. So check out the volume on this copper run recently. So this is a weekly. Okay, look at that spike in volume that we got last week. So that's Freeport-McMoRan. Now, if you follow Freeport-McMoRan, okay, this decline here in September, I think it's their Grasberg mine, okay, produces something like a remarkable amount of the world's copper. I'll pull it up again and get the statistics. And they had a tragedy there, miners dying. Okay, that was going to impact the copper production all the way through some point to 2026. So you had quite a little reset and then the copper market just took off. So regardless, this equity continued higher. But that's a big week of strength right there that you got. We had declining, and boy. So keep that one. Now you look at copper. Okay. Nice sign of strength, more than anything we've done. Okay, you had huge volume in gold in October. You had it in October in silver as well. Copper just put up the best week it's had since that pullback on the tariff news in July. And to compete with that type of move, volume-wise, is remarkable strength in copper. Now, I pulled up Freeport-McMoRan. You check out Southern Copper. Things slowed down from 130 until the recent acceleration near about 142. But look at that pop and look at this week as well. It's the beginning of Thursday. Okay, something's going on in copper with volume. Not just something. We know copper's accelerating, but there is real volume in this move. Silver, you got some volume as well, man. Can't deny it. Silver's got volume. Gold, actually, the one that a little light on the volume. We'll talk about gold. We'll look at the volume of those metals. We're coming back for the opening bell, folks.
As an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps up by 40 points, 7,004 on the open, getting back all of yesterday's losses and then some. Just like that, we're a solid almost 80, not almost 80 points off the lows of intraday yesterday. NASDAQ 100, we're up by 500 points almost from the lows of yesterday. Market's catching a bid. You jump over to the volatility index right now, your VIX, 1578. Now, what I will say is the market is back to where we were when the VIX was here, right? You take a look at the S&P, okay? Where are we back to? We're back to almost all-time highs. We're 33 points away from all-time highs right now. We're back to basically the beginning of the session on Tuesday. We're above where we were at the end of Tuesday, and you're approaching anywhere we were on Monday. Take a look at the VIX, and there's your Monday action. Okay, there's your Tuesday action. Yeah, and yesterday's spike, it's not giving it back all just yet, but keep in mind that the VIX is elevated, even as you have the S&P at the same price level. We'll talk to Tim Moore this afternoon. The SPY VIX, one of the things he looks at, when you have a VIX that's elevated versus the same SPY price, that ratio is going to be decreasing, and sometimes that's a leading indicator of weakness in the market. Another way of saying that is if you have the S&P staying flat and you have the VIX elevated, that could be a worrisome red flag in the market. And yeah, you better believe it is. Now, we've backed off quite a bit from 1810, okay? But keep in mind, we're still elevated over some of the lofty levels when we had the S&P at all-time highs, etc. All right, we jumped to a couple stories on Amazon here. So, staying with copper, right? Copper. This metal market, man. Energy, minerals, right? Amazon's buying America's first new copper output in more than a decade. It's going to be produced in Arizona by Rio Tinto with bacteria and acid, and will be used for, you're never going to believe this, folks, data centers. I kid, of course. And I'm going to pull it up in just one moment here. Now, what's remarkable is, okay, so this is the first new source of copper in more than 10 years. And Amazon needs copper for data centers, okay? The mine was restarted as a proving ground for Rio Tinto's new method of unlocking low-grade copper deposits. Rio signed a 2-year pact with Amazon, okay? It's only going to satisfy a sliver of what Amazon needs. A sliver, okay? The 14,000 metric tons of copper cathode that Rio expects the Arizona Newton project to yield over 4 years would not be enough for one facility that Amazon's building. Did you just read that? 14,000 metric tons on this one job isn't going to be enough. They're spurring mineral development because they need it. Now, this part's cool. This whole thing. Rio is deploying bioleaching process in the restart of a mine in Tucson and has partnerships to take the technology to several other in the Americas. The idea is to unlock low-grade ore left behind at old mines. So technology, okay, increasing yields, making it economical to mine. And is key to that plan to boost output when new discoveries are harder than ever to bring online. So they're going after the lower grade, and they're using bacteria. Now, I'm going to have to get this gentleman on. If you're familiar, folks, do you remember Ross Orr from BackTech? They were a sponsor, and I'm going back, man, okay? I am going back. But he is still the president and CEO of BackTech Environmental, and that's what made me think of it, man. And I'm going back like 15, 20 years, right? And that's the technology they have, using bacteria, BackTech, right, to go in there. And so maybe this is where the market has finally matured to. If you remember this gentleman, folks, he was interviewed many times. He was in many of the money shows. My dad probably have many videos, even if you just search on YouTube. But yeah, BackTech Environmental Corporation. And he was a sponsor. And I'm not sure if that company is even around anymore. They are around, of course, as in, let's see, BackTech. We'll see if, there it is, BackTech Environmental. Yeah, it's a penny stock. Let's look at this thing. I am not advising you to buy this thing right now, folks. Let's just put that one out there. Yeah, look at the run in 2021. Now, I don't think it was trading at this price, and maybe you got splits out there. Not telling you to buy this thing. I have no idea. But it does remind me of that technology. He was a sponsor for some time, man. And now you're seeing Amazon. And they're going into Arizona, and 14,000 metric tons, not even enough for one mine. 70% of global copper reserves are contained in such ores, frequently in concentrations that are not worth the expense of grinding into powders and then everything else involved, smelting, refining, etc. So at this camp, the ore is coated with bacteria and acid, heaped into a pile. The copper drips out and into a facility where the metal is plated onto ready-to-use cathodes. Whew. They do it at a lower carbon and lower water intensity. Man. Jump over to Amazon. I mean, you read stuff like that, right? That Amazon's going into the first mine of new production of copper in 10 years. They're taking 14,000 metric tons out of the ground over 4 years. And that number alone is not going to be enough to fund one data center. Hey, volume says it all, man. That was a huge sign of strength. Maybe you watch breaking higher. Maybe this is the retest we got going on already. You check out the daily. You push higher. Even yesterday, right? You make new highs yesterday. We'll see how the volume comes in today as you pull back to 593. And then we jump to the other story on Amazon when you go into the retail part of their business. So we talk about the data centers. That coordinates with the retail part of their business, but you're talking about cloud. But this deal with Saks. So Saks goes bankrupt. And we'll talk about this one after this break too. But check this out. Amazon is challenging their foray into Chapter 11. Okay? And they're upset because Amazon said it invested $475 million in 2024, and they did. Not that they said. It was a $500 million investment, okay? A minority stake in the retailer. It facilitated a $2.65 billion acquisition of Neiman Marcus, which turned out to be a disaster. And now they have no claim to anything as they go to markets with as much as $1.75 billion in fresh cash is what they're now going to raise. Amazon up by 0.2% right now. We got the NASDAQ 100 up by 230. We're coming back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Open Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Markets in the green. You jump to Goldman out with their numbers. You catch a little bit of a bid on the open. So Goldman up by 1.6% right now. Morgan Stanley out as well. MS. There you go. These bad ticks kind of making things a little distorted, but both Morgan and Goldman, they catch a bid. Okay, you jump over to BlackRock. They're higher as well. So we get a good round of bank earnings. BlackRock, Morgan Stanley, Goldman Sachs, all up by 3 to 4% right now. BlackRock, $14 trillion. And how about adding almost $700 billion in 2025? 1 year alone. Is that $2 billion a day? $2 billion a day, right? Whew. All right, we jump over to Amazon, up by 0.6%. We get a little bit of selling on the open. So yeah, we'll see if this plays out. Not a big chunk of cash for a company like Amazon, but it would be for anybody else. $500 million just in 2024. And part of that deal was that you would have a special area, Saks on Amazon. In return, Saks agreed to pay a referral fee and guaranteed at least $900 million in payments to Amazon over 8 years. Well, they made that deal in 2024, and by January of 2026, they said, we're bankrupt. None of that matters. So Amazon's claiming, that's the part I was looking for, is that their claim is that they need their consent for a key part of the loan, but Amazon refuses to give that consent. Well, you talk about detail for a $500 million investment, almost $1 billion deal. And you jump back to that story. So that story about Amazon was out today. And then you jump back to a story just out in December from the Journal. And this is talking about the same thing. Can Arizona miners unleash an American copper boom? So how about this one, man? These mines, just amazing. These open pit mines. I mean, some of these machines down there are the size of tanks, if not larger, right? And they look like little ants running around on these open pit mines. But basically they talk about what we're talking about right now. Gunnison Copper's Johnson Camp mine, where excavation stopped in 2010. Okay. Guess what? Rio Tinto. Yeah. And this just shows some of the cathodes, sulfide ore. And then you jump down to actually these cathodes. Check it out. Right here. Copper cathode production. They have a leach pad that is the size of 140 football fields and wired with thousands of sensors. So technology coming to copper, man. And there they are, 99.999% purity. Once that bacteria eats through everything. They've partnered with 10 other mines in the Americas. Among them is the Arizona one, located between Phoenix and Tucson. So copper. We're pulling back today, but we had some nice volume in this run higher. We're going to get some volume this week as well, though. We make a new high at 615, and we're backing off a bit. We check in on gold. Down by 26 bucks. Yeah, you check out Broadcom. We get back some of those gains right now. Broadcom up by 1.7%. Let's take a look at a daily on this. So options expiration. Anytime you see that huge spike, December 19th, that was quad witching, right? We had the daily, weekly, monthly, quarterly options expiring. On the 19th, you had a lot of volume spikes out there. But this whole acceleration, you had volume. And since then, very light volume. We had one pickup, and that was yesterday in the selling. You know, this is a daily, right? You had a lot of selling yesterday. Now we're trading higher. Keep your eye on the volume. It's only 9:45 in the morning, so we'll see how it comes in. But you ripped lower on 30 million shares yesterday on Broadcom. We'll see if we get some action today to the upside, up by 1.8% right now. Tesla up by 0.9%. Check in on some of the leaders. Microsoft, they give it back on the open. We're flat right now. Talked about Amazon up by 0.6% right now. Meta slightly in the green. And Oracle giving it up on the open as well. We take a look at the heat map. Excuse me, there's your Russell. Boy, healthcare stocks, right? Let's check out the S&P 500. The usual suspects driving this market higher. Look at these tech stocks, man. NVIDIA up by 2.4%. Lam up by 8%. AMAT up by 10%. CLAC up by 9%. All right, we got to look at these. Whoops, AMAT. Okay. So last week you trade higher on about 38 million shares. Not really competing with some of the bigger weeks. You break away with price. Let's check out the daily. Again, December 19th, sticking out there on volume. Volume's a little light on this extension from about 250. You had a lot of selling the week of December 15th, and since then, you've traded higher on lighter volume from 250 up to 330. You're up by 8%, man. Lam, look at this run. Now, Lam looks a little better. Look at these volume spikes, right? You had it on December 15th, and then this week was a lot more encouraging last week. If I'm holding an equity like this, folks, I'm looking at it and I'm saying, okay, what's the type of pullback that I can have when I'm in an equity that's this volatile? Well, a 382 pullback pulls you back to 162. And that's totally feasible. This thing's barely had a pullback. What do we have? We've traded higher for almost a full year, from 55 to 225. And meanwhile, we've had only a few occasions where you've been down for more than 1 week. The October low, Lam and CLAC too. KLAC. Hey, decent volume. You know, there's not like vapor thin volume. Look at this extended volume on a daily basis. From January 5th, we've had volume in this equity for CLAC up 8.2%. The chip stocks, my goodness. Same thing with CLAC though. Okay, if you're riding this thing for the long haul, there's going to be ebbs and flows. And the ebb and flow, maybe 1,200, that's where you chopped around for a bit from about October until your extension in December. Risk-reward wise, getting a little lofty at these levels. Silver down 1.7%. We got gold down by $23. We jump over that VIX right now. 1571, down 6.2% for the VIX as the market's trading higher. Let's check in. Goldman. Look at this run. Goldman up by 1.3%. You just traded up almost $50 from where we were pre-market. Morgan Stanley, take that bad tick out of there. That's a nice acceleration from 180 to 188. And BlackRock as well, up by 4.2%. One more segment. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have the S&Ps just chopping around where we kicked off the session. 7,002, up by 0.5%. We get back all of yesterday's losses and then some. NASDAQ 100, up 1%. You got the Dow right now, up 0.2%. And you got the Russell. All-time highs on the Russell. How about it? 2682. Now, the Russell's lacking a little volume here. That's your weekly. Okay, you look at this volume. When's the last time we had a huge acceleration on volume? October 13th. Yeah, you back this up. I mean, you had selling December 15th. We come into holiday trading. Last week was only 855,000 contracts, a pretty light week on that pop. We might get some volume this week. We'll see. But right now, only 566. Bitcoin off about $1,500. Keep your eye on that VIX, 1567. Yeah, that thing keeps dropping. Nothing getting away in this market right now. It's found a bid yet again. The 10-year, a little bit higher yield right now. You jump over to dollar. Got some dollar strength today at 99.43. Hey, dollar's almost pushing 100. Metals are holding up well right now. Silver's above 90. And gold's within a few bucks of all-time highs right now. And you got dollar strength up to 99.43. Let's check in on the dollar yen. Great conversation with Teddy Kegstad. This thing's been quite a run. Look at this dollar yen, man. Okay, so that's dollar strength, yen weakness, up to 158.71. Take a look at the monthly. I was talking to Teddy yesterday. Great conversation, as in they're on a hiking path right now. They're on a hiking path, okay? And we are on a cutting path. So that's going to strengthen their currency and weaken our currency. There's other things in play. But be careful at these levels, man. And same thing with the dollar. You know, dollar, 100's been the ceiling recently. We're at 99.43. Quite a bounce from 97 and change in December. Folks, thanks so much for tuning in. I appreciate you kicking your trading day off right here with me on the Morning Market Kickoff at TFNN. Stay tuned. Basil Chapman, he's coming up next with the Tiger Technicians Hour. I'll see you at 3 o'clock for the Tom O'Brien Show. Have a great day, everybody. Stay tuned. Basil's coming up now. Thanks, folks.